All right. I want to do a video here on SoFi. I have a couple videos about SoFi on my channel already, and I'll put them in the description. And I will also put some other videos from other YouTubers that I find particularly helpful as well in the description. A lot of video about SoFi being uploaded to YouTube lately. I think it's starting to become definitely not a meme stock, but it's definitely becoming one of these names that it's sort of, a to the moon name, if you will. And so I kind of want to go through the results here, and I actually want to explain why I think the stock has kind of gotten a little bit ahead of itself, but also why I'm still a long-term bull. Full disclosure, I have about 600 shares at an average cost of about 17 bucks. I'm doing pretty well. I owned it when it was still going through the SPAC merger, so I owned it before it actually de-SPACed and became SoFi. But anyway, let's get into the results here because Q3, another amazing quarter. As I've said in the past, I'm a big fan of the management team, especially the CEO. So let's get into it here. Q3 2021 summary results. So as you can see, between Q1 and Q2, SoFi added about 270K or almost 280,000 subscribers. And then from Q2 to Q3, they added 377,000 new members. That's actually their second highest quarterly increase in history and near 100% growth year over year comparing to the same time last year. They're right at the 3 million cusp. They were at 1.5 this time last year, so almost 100% growth. But what's pretty amazing is actually on the next slide, they track how many products each customer uses, and they're up to 4.3 million products, which is representing 108% growth. And so that actually means that there's a lot of cross-selling going on. And I wrote about this on my blog, on my Substack, which is free. I'll put a link to the Substack in the description. But they have this, what they're calling a financial services productivity loop strategy. This is basically corporate jargon for just like a flywheel strategy, meaning they get you into their ecosystem using one product, and then they start cross-selling you a bunch of other things, which keeps their cost of acquisition low, but the lifetime value of a customer high, which is effectively translating into very strong unit economics. Over time, that will allow them to invest less into sales and marketing and more into R&D and product development to cross-sell you, the user, the member, the subscriber, more things at a lower cost to them overall. And so you can see here that, they added 377,000 subscribers. They also added, 108% growth for getting to 4.3 million products, cross-selling with SoFi Invest, SoFi Money, and SoFi Credit Card. This isn't too surprising to me because during the quarter, they launched this influencer campaign with hashtag sofimoneymoves. And if you are on TikTok or if you listen to the earnings call, they said that sort of hashtag SoFi Money Moves got over 8 billion views just on TikTok. And so obviously a good portion of that then converts into people tapping in, downloading the SoFi app and becoming a member. And they were doing giveaways, and I think they spent about $75,000 for random people that they would choose their video and they would get some kind of prize. But if you think about it, they shell out less than $100,000 for this kind of growth. It's pretty unbelievable. Now, if you go down here, Galileo's kind of what a lot of people on the sort of finance Twitter and FinTwit community talk about. A lot of other YouTubers talk about. I'm kind of surprised that equity research analysts are not talking about Galileo more. As I said in my prior video, just in the last month leading up to earnings, SoFi was given 3 buy ratings or buy equivalents from very legitimate, high quality investment banks, Morgan Stanley being one of them. None of them are mentioning Galileo. This is a company that SoFi acquired last year during COVID, and it just made complete sense. I don't want to get into kind of the rationale of the deal. I explain it in more detail on my Substack. So again, you can subscribe to that below, totally for free. But this was just one of those acquisitions that completely made sense. And as you can see, they're, almost doubling. They had, 49 million users on Galileo this time last year. Now they have 89 million. there was some flack that, oh, they're only growing at 80%, whereas the, prior 4 quarters, they were growing in the triple digits. Obviously, if you know anything about investing, that's just kind of ridiculous to, ding a company for growing, not in the triple digits, but still growing at 80%. At some point, there's going to be, I don't want to say diminishing returns, but you can't grow in the triple digits forever. It's basically, it's near impossible. This is really, I think, the most lucrative part of the business, at least the business today. There's obviously a lot of growth catalysts, the, potential bank charter on the horizon. And that's what a lot of the equity research analysts tend to be, kind of weighing on right now. I obviously I think it's coming. SoFi has made a couple of hires on their management team that had a lot of experience, in banking and financial services, not necessarily like investment banking. That's not what I mean, but, working at regional or, sort of larger, not like community banks, but, like Fifth Third and stuff like that. And so I don't think they'd be making those hires if they didn't think there was a solid chance of them, getting their own bank charter. What's kind of interesting here is that let's look at the lending segment, right? So let's actually switch over here and look at lending originations. They do home loans, student loans, personal loans. So lending did, adjusted net revenue, 215 million in revenue, and that was off of a total net revenue of 277 million. So again, lending is definitely the biggest part of SoFi's business today. And we can see that kind of year over year, student loan originations were down. But this is not totally surprising, right? Because we do know that there's been the extension of the CARES Act moratorium, which is, directly impacting the student loan part of their business. But, you can see that personal loans almost, up 166% year over year from 616 million to 1.6 billion. And then home loans, a nice 26% growth there too. So the growth in home loans and personal loans more than outweighed the, sort of short-term blip that they're experiencing in student loans. And I want to make that clear that, this is not a bad thing of, the student loan segment's going down. That's not really the case at all. That's just a sort of a sort of an anomaly to the business. So this is definitely a short-term, kind of hiccup or just a road bump, if you will. I have no fear that this business, in sort of once things kind of get, back to normal, if you will, this will be another growing part of their business. What I would like to see is, the total revenue start to shift from, more than just lending, and we start to see more of the technology business, or, the financial services and technology segment, contributing more to overall revenue. We are starting to see that shift right now. Obviously, that's what we're seeing with the Galileo accounts, right? Like this is the non-lending part of the business. But the reason I want to see that is because SoFi still posted, I think it was a $30 million loss in the quarter, right? So they're still not, they're not, So SoFi recorded $30 million GAAP net loss in the third quarter. And even though this is an improvement year over year, they're still not a profitable business. And it's the technology business and the products that Galileo offer that are particularly high margin. And so the faster that we see this revenue mix shift, we should start to see a higher margin profile, which should then flow right down to net income, cash flow, and they should start, they'd be generating, they should reach profitability in a faster manner. I don't want to be too harsh on them though, because, they did have, this is now, getting into the financials, adjusted EBITDA. This is the fifth straight quarter of positive adjusted EBITDA. So that's certainly encouraging, right? And they set record revenue of 277 million, adjusted net revenue. So they're beating their own guidance. They're setting their own records quarter after quarter. So, I mean, this is definitely very much, what I would call a hyper growth company. They are very much invested in, product development, sales and marketing. This is grow at all costs, be aggressive, but at the same time, being efficient capital allocators. And if you listen to the earnings call, and I'll put a link to that in the description below, Anthony Noto describes, sort of for every dollar that comes in, how much gets reinvested back into the business. So they are very, very methodical about how they think about investing in the business and, versus sort of short-term profit, targets and even longer term profit targets, because obviously this is a business that we want to see become profitable over time. I'm okay with them being a money losing business today, but in 5 years from now, I'd be a bit concerned. They're basically, their net revenue on a trailing 12-month basis is just shy of $1 billion. And this is actually, if you think about it, they just posted $277 million in quarterly revenue. So they've hit a run rate, an annualized run rate of over $1 billion, which is actually higher than their prior guidance. They said that, on their last call, that they would do about $980 million of revenue for the year 2021, so just shy of $1 billion. They're now saying that, they think they're going to eclipse $1 billion this year, which I think is, I kind of saw that coming. I thought that there was a very good chance of them, doing $1 billion or more this year, but the fact that they actually are going to do it, I view as a very positive sign, especially because, we've had other fintechs report earnings. Square, I also own, big believer in Square and their technology and their ecosystem, but their quarterly results were just kind of meh. They were okay. Definitely not going to panic sell. I haven't sold a single, share of Square since I've owned it, but and certainly one quarter is not indicative of the future performance of the company, but I'm just making a point here that Square's results were just okay. Upstart, they actually had a great quarter. They beat their guidance, and then they even raised their guidance, but I still think, and I'm going to put a video that I posted about Upstart in the description. I think that company is massively overvalued. I think it's an interesting piece of technology, but I think it's definitely, there's a lot of risks with that one. And I think, just their sort of price to sales ratio is just kind of out of whack, especially when you compare it to a business like SoFi, which is effectively, valued, its market cap is half of Upstart's roughly. And they have all these different products and, more experienced management team. And it's just a bigger company overall, in terms of revenue. So, one thing that I wanted to hit on here is the bank charter, right? A lot of the equity research analysts have said, well, the bank charter, it could contribute X amount of revenue, over the next 5 years. And everybody's kind of, the stock has had a run up almost on this news, but it hasn't even happened yet. And so you're in a situation where it might sound weird, but if they get the bank charter, the stock price might actually go down, because it's sort of like the news and the anticipation has already been baked into the current price. And then when it actually happens, people kind of just sell immediately and they cash out on their sort of short-term profits. That's certainly not the kind of investor I am. And that's also not the kind of strategy that I would encourage on this channel. This channel is dedicated to long-term investing, and I'm definitely planning on holding SoFi for the long term. I haven't traded a single share, and I will not do so until my thesis changes. I think, this is a company that I would love to hold, for at least 10 years, if not longer. I think they're going to be, a huge contributor to kind of this fintech revolution that we're seeing. And I personally view Square and SoFi as the leaders in that category, which is why I hold both stocks. But let me know what you think. I want to see what your thoughts are in the comments. I try to reply to every comment. I do read them. So let me know what you think, especially compared to other fintech stocks, if you hold Upstart or Square or others. Let me know what you think about this quarter overall, if you think the bank charter is coming. And, definitely remember to check out the Substack. It is totally free. Like and subscribe to the channel. Share this video. It helps me out a ton, especially with the YouTube algorithm. Again, like and subscribe, share, comment. I'll try to get back to you. And check out the other videos in the description as well, especially those of some of the other YouTubers that have been posting about SoFi as well. I think there's a lot of great content out there. I think this is a really interesting company, and I think it's just now starting to get covered quite a bit. Even though, me and some of these other YouTubers have been following it for, basically a year now, at least since it's been public. I was following it even as a private company as well. But anyway, remember to like and subscribe, and thanks for watching.